There we go.
All right, we will call this Board of Directors meeting to order. We also have the Finance Committee joining us for a portion of the meeting tonight for our audit and financials presentation at 7:04 p.m. This board has a land acknowledgement and anti-racism statement that they support and it is posted on the board's website. Roll call at the moment. We have Brian with an excused absence. He's not feeling well. And Josh is not here at the moment. And that's everyone from the board. And then from the Finance Committee, we're just missing Alex. So for the adoption of the agenda, I am going to make a quick motion to amend the agenda to remove item 7C for the Sun Valley debrief report. I do not have that finalized yet. And also removing the closed session. We're going to be probably having to have a meeting next week, a special board meeting, and we'll cover both those things then.
Do you want a movement for that adopted agenda?
I need a second on the amendment.
Second.
All right, all those in favor? Aye.
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 All right,
Excuse me, I have a question.
what's up?
Do we have a quorum of the board?
Yeah.
We do. Okay,
We've got 5.
5 of us.
okay.
Yeah,
We don't have pictures. I'm just not clear on who's present.
we got 6.
Sonia and
Sonia, Sam, AJ, Kim, Keith McLean, Nancy Algonac, Timey Vanderpolder.
Thank you.
All right, so then I move to adopt the amended agenda.
A second. I thought we did that, but.
We amended the agenda, then you
Oh,
gotta
okay.
adopt the amended agenda. I think, I don't know. That might be something to ask the parliamentarian about if that's actually necessary. But that's what we've always done. So all those in favor of amending adopting the amended agenda?
Aye.
Aye.
I just messed up my computer, but I'm still here.
Okay, so moving to announcements. I have one announcement. Steffi Jones tendered her resignation from the board. And yeah, we'll be discussing that in new business, how we're going to handle the vacancy and announcements and interview and whatnot. But I didn't want to take up too much time right now with everybody else here and the auditors getting ready to present. Does anyone else have any announcements?
Yes.
Go ahead, Nancy.
Well, I want to remind you that there already is one vacancy on the board, and applications are due on the 11th of January at 2 p.m. in the afternoon. And even more exciting than a board vacancy is the Nominations and Elections Committee vacancy, which our first meeting is January, at the end of January. So I hope anybody out there who's interested in elections will apply. The instructions are on the website. There's also something going on at the ACC committee, but Keith can speak to that.
Yeah, we're still up for announcements. The ACC is always looking for candidates. We currently have 4 open positions, and anybody interested in helping out the community, progressing applications and getting exterior alterations done and new houses confirmed, I'd greatly appreciate your interest. You can always check in at admin or go online and fill out a form. for the ACC, or you can email me directly, and we'll make contact and get you on board. Thank you.
Hi, this is Callie. I just had a question, a process question. AJ, can you just let us know as Finance Committee members when and if we're supposed to vote on
Yes.
these agenda items? Okay, thank you.
Yeah, there's nothing for the finance committee to vote on.
So I have my hand up. My announcement is that there will be 1 to 2 vacancies on the finance committee for 2022. So if any community members are looking on and they have a background in finance, we would love to have your application. Applications are online and can be found at the administration office.
Any other announcements?
Yeah,
Sorry, I can't see everybody, so I'm like scrolling through. So just speak up if you have one.
there is something I'd like to add, AJ. This is Nancy. Committee members, committee membership is limited to members in good standing, and you must remain in good standing for the entire time you're on the committee, and that is also true of the board. So I just thought I'd throw that out there if it wasn't clear. Thank you.
All right. Any other announcements?
So AJ, I don't know if this is an announcement or a property owner's comment. So if you're about to open the property owner's comment, I might just put it there.
Yeah, that'll be next.
Okay.
So if there's no other announcements, then you can go for it.
Okay, well, my first announcement is that as of November 29, I completed all the requirements to be an enrolled agent with the Internal Revenue Service. So I now have vast, awesome, and supernatural powers. No, I'm just joking about that. But I hope to continue to make a contribution to finance with this, additional skill set, you might call it. And now
Congratulations.
Thank you. I'm still waiting to get my card. I have to have a little card, but that the IRS is a little slow, as people may know. What a property owner's comment, but also as a member of finance and hopefully going forward. I do want to bring this up as a friendly suggestion, and that is concerning the transfer fee. I continue to feel some concern that it did not come to finance. I understand.
Hey, can I interject? I'm so sorry, but I think, I understand, but the reason I'm saying this is you were on the board that enacted the transfer fee.
Excuse me,
So
but let me finish, please.
I'm trying to help you in this moment,
finish.
Gail. I'm trying to help you in this moment. You were on the board that enacted the transfer fee. It's inappropriate for you to lobby in any way.
I'm non-lobbying. I have not finished. Please let me finish.
Okay.
Okay, now this is what I want to say. That when we serve on the finance committee, to some extent, our reputations are at stake, and we don't want to be seen as asleep at the wheel. And by not weighing in on that issue, it's possible we could be seen as in dereliction of our duty. Now, I understand that there were legal concerns and a lot of reasons why that didn't come to finance, and I'm not trying to relitigate, as they call it, all of that decision. But this is what I'd like to make as a friendly suggestion. I've spent quite a bit of time researching Robert's rules, and I cannot find any prescription against a committee, against finance, also going into closed session. And so as we go forward, I'd like to suggest or recommend that if other sensitive issues, but with a big financial impact, come up, that finance itself go into closed session so that it can have an informed recommendation to the board. That is my request. And I speak as someone who's been really torn. I mean, I do feel that my own reputation as someone who wants to be diligent and attentive is somewhat at stake. So I hope that, Sonia, this is all right with you. I just feel like going forward, there is a solution perhaps. Thank you.
So just to clarify, because we have talked about this with the board's the only one allowed to go into closed session, that we've had that conversation with our attorney because we've had it regarding ACC issues and stuff like that. And so he's told us that, you know, the committees can't go into closed session.
And so I just want to clarify also, and Gail, I appreciate where you're coming from, and I think you understand where I was going. I don't obviously the Finance Committee has a valuable role with the association, but on any committee that anybody has an interest or a potential conflict of interest in any way regarding the matter that's being discussed, they should recuse themselves from speaking on that matter. And in this particular instance, if it had gone to the Finance Committee, you would have had to recuse yourself from the discussions and any participation on a vote, because you're actually from one of the board directors that voted to implement that fee. So it would have been a conflict of interest for you to participate in that discussion and vote.
Well, Sonia, the conflict of interest is more immediate for the board members who stand to receive a rebate. I have no financial interest in that outcome.
And we don't either. You know, that's
You
the
may
other.
not, but in other words, this is why I am proposing that going forward, that we have closed sessions, when matters are sensitive in finance, so that we can fulfill our duty.
Well, I understand what you're saying, but first of all, this fee impacts almost 60% of our community members, and so this is not there's no member of this board that is in being enriched by reversing a policy. It's a policy, and any board can reverse a policy of a different board. Number one, and this board enacted that based on the advice of the association's attorney. And so we're not enriching ourselves, which is the implication from what you said, that we had a financial gain or something from that. That's not happening. And but my point is just simply, even if we were able to do what you're asking, and I think we all agree that if we could have, we would have included the Finance Committee. But in that case, you would not have been able to participate. That's all. I was just pointing that out. That because it's inappropriate.
Can I make a comment? This is Callie. I think this discussion's getting a little off the rails here. I think the point that Gail made, and it's a valid point, and we had talked about it, is just that the Finance Committee is here to help the board make legitimate, informed decisions. And I think we've established that. And going forward, I'm confident that that will happen. I don't think the conflict of interest is, I think that's something the attorney needs to decide. My definition of conflict of interest is very different than Sonia's. So that's probably something the attorney needs to decide. But I don't think that's right now is what we need to discuss. So thank you.
We have discussed that with the attorney, just so everyone's aware. He's been helping us along the way with this stuff. So Kim, you got your hands up.
Yeah, I just want to add to the conversation that we had this conversation back towards the AGM, and I wanted to let the Finance Committee know that I certainly appreciate their input and wanting to participate in conversations where it is your job to help oversee finances. At the same time, we do need to comply with our legal restrictions and what our attorney says we can and cannot discuss with non-board members. But certainly moving forward, anything that is not in conflict, but what we can share with the finance committee legally will certainly be brought to the finance committee. And I just want to make sure that everyone is aware of that.
All right. I guess I'll let John open it up to people
Sure.
in the audience.
Yeah, we do have six other people with us here as attendees. If anybody would like to jump in for their own property owners comments, just use raise hand in Zoom, and I'll bring you over and you can add your comments. And maybe that's all for now.
All right. Do we have the auditor here yet, Joel?
Yeah, he's
Looks
signed
like
on.
Ben just joined us. Yep.
Okay.
Yep, I'm here.
Well, I will pass it over to you guys to get going on that.
All right. So I'm Ben Hancock. I work for Larson Gross, and we did the audit this year. And I'm here to present the results of the audit to y'all. And I do have a PowerPoint, so let me get that up and running here. How's that looking?
We don't see anything. Are you sharing your screen, Ben?
Oh, here we go. Okay, I think you can see it now. Okay. Yeah, so I'm Ben. I'm presenting the results of the audit here tonight. And some of you may remember me from last year. We took over from another auditor last year. And so I was kind of the lead last year. So this is my second year working with you. And it's the second year of our 3-year proposal that we provided a couple years ago. And we do a number of things for Sudden Valley. We do the audit, and then we also prepare the Form 990 tax return. And we also provide what's called IT managed services. So just we have a team that works with your IT side of the business just to make sure everything's staying safe and all that. So as far as the audit goes, they are required by Section 4 of your bylaws, and then Revised Code of Washington says they're required for any homeowners associations with annual assessments of 50,000 or more. So your assessments, of course, are over the 50,000, so it is required. And overall, it's good governance, good accountability to your property owners, and part of a healthy system of checks and balances that you get an independent look every year at your records. And so common misperceptions of an audit is it's not a fraud investigation. It's not a guarantee every number is correct. We use a concept called materiality, where we set a threshold to make sure it's materially correct. It's not an insurance policy. It's not a review of every check written throughout the year, although we do look at quite a few different checks to make sure they're supported. It's not just a once-a-year check on your staff. It's meant to be a kind of year-long type thing where we stay in touch, stay ahead of things, make sure things run smoothly. And it's not a substitute for good day-to-day internal controls. We do look at internal controls to see if they're designed properly, which I can say they are well designed at Sudden Valley. And that way, as long as there's multiple people looking at every transaction, it's a much less chance that a fraud could occur. So you have good controls in place. And my role as the external auditor is that we are licensed and regulated. So we also get audited. We have a peer review and we have an annual inspection where they look at some of our audit files to make sure we're doing good audit work. And we have always received a clean inspection through the peer review process. We're independent, unbiased, and non-political as it comes to Sudden Valley Community Association. We have a responsibility to all readers of the financial statements. That's you as the board, the finance committee, management, and then different regulatory bodies. And the outcomes of a good audit is really just telling you whether you're getting good information from your accounting function or not. And the good news is that Joel and the team there does an excellent job of being able to produce accurate monthly financial statements, which he presents to you. And you may have heard the term accrual basis before. The financials under GAAP are required to be under accrual. And your internal monthly financials are pretty darn close to accrual. I'd say as close as you could reasonably get it in monthly financial statements. So that's really good. It also, like I said, tells you how you could potentially improve your control system. We really look at this from a practicality standpoint, what makes sense. But the control structure is really good there at Sudden Valley, the accounting function. And ultimately, at the end of the day, we provide an opinion that your financials for the year are correct. They're an accurate depiction of your financial situation. So like I said, we performed the audit this year. We also assisted management through drafting the financial statements. And that included a new revenue recognition standard we had to implement this year, which I'll talk about here shortly. And then I mentioned the 990 services where we prepared that tax return. The Form 990 is a nonprofit specific tax return so if you're not a for-profit entity, which community association is not, you have to file this Form 990, and it's a publicly viewable document. So you could go to a website like GuideStar and look up pretty much any homeowners association's Form 990 there. So we issued that there in November, about a month ago. As part of the audit, we also issue a management letter, which just has some required communications in it. And so with that said, I want to talk about the financial statements, just kind of go through some highlights, but ultimately you'll see there in our report, we have an opinion paragraph that says the financial statements referred to above present fairly in all material respects the financial position of the association. And then we issued, what's called a clean or unqualified opinion. That's exactly what you want. It means everything in the financials is materially correct. So with that said, I'm going to get into the big topic for tonight, which is the new revenue standard. And I'm sure the last thing you want to do with your evening is hear me talk about an accounting standard, but it was kind of a big deal this year. So just some background, going back many years, there were many different revenue recognition accounting policies, and they were usually specific to, software companies, manufacturers, homeowners associations had their own guidance out there for how to recognize revenue in the financial statements. So all these different ways to recognize revenue based on what your entity type was. And then around 2014, there was a standard that was passed in the United States that was going to call for this new revenue recognition standard. And it kept getting delayed and delayed and delayed. And it finally went applicable for your 2020 statement. So basically 6 years after it was first announced. And before I get into some highlights on the financials, just some highlights on this new standard. I want to give some kudos to Joel because he did almost all the work to implement the standard. And it's actually very rare that we have a client that actually does it themselves and then provides us with their calculation. It's usually like, oh, I don't know, like you guys are the auditor, you guys do it. So we do it for a fee, of course. But Joel just took the bull by the horns and took it on and, you know, went back 3 years basically in time to get you accurate financial statements so we could adopt this standard. So great job, Joel. We took what's called a full retrospective approach. So in your financials, you'll see 2 different years. You'll see 2019 and 2020. And those years' revenue was recast to reflect the new standard. So it's comparable year over year. We didn't have to do that. We could have just done what's called a modified retrospective adjustment where you just would restate 2020, but then the years wouldn't have been comparable. And we want you to have comparable years here. So really, in a nutshell, the impact is really that revenue is just recognized over time now instead of upfront for your dues and assessments related to capital expenditures and reserve funding, as well as the title and transfer fees. So a couple different items within your revenue are recognized over time instead of upfront, i.e. you used to recognize revenue as soon as you got the money, but you have to recognize it over time now as you get the money and then you spend it on what it's ascribed to, capital reserve type expenditures. So as you can imagine, there was a lot that went into those calculations. What doesn't change with this is the actual billings and the cash flow. That will all stay the same. It's just a presentation in your financial statements so we can have your financials in accordance with US GAAP and issue a clean opinion. So we had to do it basically. The overall impacts in your financials are less upfront revenue. Again, it's over time. And you essentially record a contract liability for what you will record over time as you make those expenditures. So with that said, I want to just kind of walk through some of the highlights of the financials. Is the balance sheet showing up there for you?
Mhm.
Yeah.
Okay. Okay, so not a ton that I need to go through here, but I'll say the first thing that's cool is that we were able to get back to comparative financials. You might remember last year we only had 2019 shown in here, and that's because we took over from another auditor and we couldn't rely on the prior year, and so we could only show 1 year. And so it's nice to have the comparative statements back again. And I guess the first thing that kind of sticks out to me in terms of your assets is you have, a pretty fair amount of cash to do what you need to do for the community. And then property and equipment comprises the rest of it. So you have almost 19 million of assets. The way it works is really dues are deposited into an operating account and then transferred to roads, mailbox, assessment, et cetera, and coded to where the amounts need to go to serve your community. So it's a healthy balance sheet. I guess one thing I'll say is there's these parcels and lots held for sale. That's pretty similar to last year. That's the area Y lots held for sale. They haven't been permanently turned to green space that I know about, at least. So as long as that's the case, and the board doesn't say they can't be for sale anymore, then they'll stay on the books. So that's all I have on the balance sheet. And then this is your statement of revenue and expenses, which is an income statement essentially. It's just that homeowners association's name for the income statement is statement of revenue and expenses. And the purpose of a homeowners association, as you're probably aware, is not to necessarily generate a profit, but it's to determine how much money can be put back into your organization to continue to make the amenities and everything livable and enjoyable. So overall, when you look at the income statement, revenue expenses are somewhat flat, which is a good thing, especially in today's day and age. Not a whole lot jumps out at me, just kind of business as usual. Looks like things are going well. There's an excess of revenue of expenses, which is nice. You don't want it to go negative per se. But overall, definitely a healthy community association, no question about it. You do have a copy of the financial statements, and there's a bunch of notes, which I'm not going to bore you with. So I'll let you read those on your own. So that's really all I have on the financials. Joel, did you have anything you want to say about the financials or 606 or anything, or you think that kind of covers it?
Yeah, I was just going to mention that. So if you scroll back to the statement of revenues and expenses. So the line item that will be affected the most will be the dues and assessments, capital expenditures, and reserve funding. So that's the amount that will appear basically in any year where our expenditures on capital are lower than the dues that we take in. It will appear lower than what you'd see on the monthly financial statements. And so it's going to be that dues and assessments, which was the case in 2020, 2019. So it'll be that line item that Ben highlighted. And the other big line item will be title and transfer fees. So those capital reserve holding fees that came in that we collected before the standard went into place, that would be revenue. But now it's not revenue until we actually spend it on capital stuff. I'm ignoring the discussion of what's going to be going on with capital and transfer fees next year, but just ignoring that. So meaning that amount is basically backed out of the income statement and then put on the balance sheet as a contract liability.
Right. So this is new on your balance sheet, this contract liabilities, which is basically taking that revenue away that would have been upfront and putting it into a liability. So this is what you'll be spending of the revenue over time.
Yeah, like a simple example would be, let's just say we took $1 million of capital dues in, and then we had a year where we didn't make any capital expenditures whatsoever. So then normally, before this standard went into place, we'd say $1 million of capital dues revenue, and then that $1 million would show up on the equity section of the balance sheet. But now, but the cash would still be $1 million coming in. But now in this case, since the standard's in place, if we took in $1 million of capital dues revenue, but had no capital dues no expenditures during that year, well, the cash would still go up by $1 million, but instead of it showing up in equity, it then would show up in that highlighted contract liability, which is essentially unearned revenue at that point. And then when we spend the money, like in a future year, then it comes out of that contract liabilities and will show up on the income statement and then be transferred over to member equity at that point.
Do you call it, Joel, do you call it contract liability because you expect it to be used on contracts?
Yes. Yeah. So that's essentially kind of what the standard is saying, is that, of course, the standard is really controversial. There are a lot of, as you can imagine, a lot of CPA firms and HOAs that think this is utterly absurd, and it kind of is absurd in a sense. The FASB just hasn't issued guidance saying, oh, well, don't worry, HOAs, it doesn't really apply to you. So since they haven't said that we still have to comply with it. Now, there's a possibility in the future that they could come out and say, oh, geez, you're right. Everyone talking to us, maybe it doesn't apply to HOAs. So now you have the option to not do it. But since they haven't said anything like that, HOAs are kind of in this kind of uncomfortable situation to where they have to comply with it. So yes, according to the standard, it doesn't apply to operating dues because our contract is, in a sense, the budget, like the yearly budget. But the capital dues, the contract is basically where we're saying, well, this capital money that you're giving us in terms of the members, we're going to spend this on capital expenditures. So until we actually do that, then it's, well, sorry, according to the standard, it has to be unearned revenue, so to speak, which is at contract liabilities.
So is this how it's going to be reported from month to month, or is this a correction that's like made at the end of the year? Or is
No,
this a
actually,
month to month?
yeah, I'm really glad you asked that, Gene. So basically, on our monthly financial statements, we don't have to show it like this because we don't purport that our monthly financial statements are GAAP statements. So from a monthly standpoint, for now, at least, we'll just keep things the same. Otherwise, it could obscure and look really kind of confusing of how much we're actually taking in dues, from month to month in terms of capital dues. So for now, this will become it has to be done in the audited financial statements. So for now, we'll do it as a yearly audited financial statement presentation. Since we
Okay.
have to. But yeah, that's a great question.
So where does the money go during the year if it's from the month to month?
We'll just treat it as though the standard isn't in place on our monthly financial statement. So if we take in $1 million of capital dues revenue or capital dues, we're just going to say it's revenue and it'll show up on the financial statements in the capital portion like normal. Now, if we change it, the monthly statements, then instead we'd have to not show it unless we spend it and then show it as a contract liability. But then it gets really confusing in terms like how much are we really taking in month to month in terms of dues. So, at this point, yeah, we'll keep the monthly presentation the same because we don't have to do the monthly statements. We're not saying that these are US GAAP statements, but for the yearly audited statements, yes, we have to do it. So that's why we're doing it here.
Thank you.
Can I jump in here? I have my hand up, but I don't think anybody can see it. This is Sonia. So my understanding is that there is another definition of contract liabilities, and that would be that the association, that's our agreement with the membership. Membership pays that money in, X amount goes to our operational expenses, X amount goes to our capital expenditures, and that is our obligation and our commitment to our membership that we're going to utilize those funds in a certain way.
That's right.
So that was my understanding of what that actually means.
Yeah.
Exactly. Yeah, you're going to put those funds into the organization. Yep.
Thank you.
Yeah.
Yeah, and 100% agree with what Joel said there. It doesn't make sense to change up your monthly reporting or your internal chart of accounts for this. What you're getting in the monthly financials is an accurate representation. It's just we had to do this basically to meet the FASB standard to call your financials in accordance with US GAAP and issue a clean opinion. So it's controversial. There's gray areas there, whether it's good for homeowners associations or not, but that's the rule.
Yeah.
Okay. I guess with that said, I'll move on. I guess I would just encourage you to read through the financials when you get a chance. Can probably get something out of there. Okay, stop sharing.
Actually, Ben, if you wouldn't mind, can you put those financials on just for a second? Yeah, can you go to page 15, the reserve roll forward schedule?
Oh, yeah.
So this reserve roll forward schedule right here, basically it's showing you the fund balance and how it rolls from December 2018. You can see for the first bold balance, December 31, 2018. And then you'll see the adjustment under that where I adjusted that away. And then basically, so when I'm saying like for road reserve, that 925, 537 negative. So basically I'm saying that goes away in a sense. Where did it go? I'm reclassifying it in this case, that's a part of that contract liability balance is where it goes. And then the way that I kind of structure this reserve roll forward to make it more useful would be if you go down to the that 2019 collected appropriations amount for road reserve, I didn't have to lay it out this way, but I thought this would be useful from the standpoint where basically what I'm saying is there is 1,197,744 of collected appropriations. And then the very next line, adjustment for unrecognized 2019 collected appropriations. That's where I'm saying, oh, and by the way, we can't claim that yet. So that amount is now reclassified as a contract liability balance. But we took in that money is what that's showing you.
Mm-hmm.
And the same thing is going on in, once you get into the 2020 portion of that reserve roll forward.
Yeah, this is really where all the action is in this reserve roll forward.
Yeah.
Ben, I don't know if now is the time to ask a question I have, if you're going to go through the document or were you wrapped up, or I did have a question on page 15.
Yeah, go for it.
Yeah, there's a statement. I don't know if you want to scroll to page 15 of your document or not, but there's a statement at the bottom of the page that talks about the reserve study as of 12/31/20. There it is. The present total current replacement cost, 29,751,300. And recommended fully funded total of 12.7 million. And then you say the association is 27% funded as of December 31st, 2020. So my question is, when I look at the reserve study balance on December 31st, it was 4.5 million. So the 27%, you didn't show your work, Ben. Show your work. How did you you come up with these numbers?
Valid question.
I can answer. I can jump in and answer that if you don't mind. So Kimberly, what you're seeing right there in that paragraph, that's all three reserve studies added together is what it is. So that's roads, surf, mailboxes, and basically it's taking the totals, basically the funded amounts, adding them together, and it's doing the same thing for the recommended fully funded. Yeah, good. Yeah, go ahead and stop. There.
Let me go to the one where I have my calculations.
Okay.
Actually, scroll just a little bit more. Actually, on that, keep going. Stop right there. Yeah, actually, go up to the next page. Actually, this might even be easier. Yeah, just go one page or down a little. Actually.
The next page? Or?
Yeah. There's, right there. Stop right there. You see that, Kim, that bold sentence right there?
Yes.
That becomes, this might be handier for you. It's the same stuff that Ben's doing, but
okay.
It says total deficit 1/1/2021, fully funded balance as 1/1/2021, which is essentially December 30, 2020. 6,172,305. So basically you're taking those amounts and you're adding up all the numbers in this area from all three reports to come up with that.
Okay, yeah, and so that's what I got. I got the 3.4 million, the total reserve balance, and then you had 27%.
Yeah.
So is 27%? Is that the standard recommendation for fully funded? What is the best practice standard percentage?
Actually, I can answer that question because when I was doing the RFQs with the reserve study, all those reserve study firms asking them to send in bids, I would ask that question. And like one guy in particular, one of the big firms, especially, I asked them, what's the average fully funded balance that your clients seem to be doing? And he said, approximately around 30-35% is what he sees. So we're actually not too far off of that from that perspective.
30 to 35%. Okay. Thank you. And that's page 2 of 184. Thank you.
Good question. Any other questions on the financials? before I move on? Did everybody zone out in the ASC 606 revenue recognition adoption?
No, you just are presenting awesome financials and we're really happy about it.
Okay,
We're just Ben, we're riveted off of your sexy presentation.
That's I wanted to hear riveted. That's the one word I wanted to hear. Okay.
So I have a quick question. I'm not sure where you are. I mean, it's not the financials exactly, but you mentioned much earlier a website with the 990s that reports the 990s, and I couldn't catch the name.
Oh yeah, it's called GuideStar.
Oh, GuideStar. Good.
Yeah.
That's all. Thank you.
Will be, by the way, Gail, I'll be posting, that reminds me, I need to post, I'll post our 990, the last one that was just filed literally last month on our website too.
Thank you.
Yeah, so this is GuideStar here, guidestar.org. You can just search for any nonprofit or community association. There's Sudden Valley.
Great.
Yeah. And my last slide here is just that we issue a management letter that has our required communications in it. And it's just what we're required to communicate to you as the auditor. Defines us as the auditor and management, states we're independent, says that we use the concept of materiality, identifies any unusual transactions, which there were not, talks about any summary of major accounting estimates, like depreciation of your fixed assets is the biggest one there. And then summary of audit adjustments, if there were any, which there wasn't, other than just a debt reclass, which is no big deal. It's just a balance sheet presentation reclass. Nothing was incorrect on Sudden Valley's books. And then whether or not we have what we call material weakness or significant deficiency in controls. And we did not have either of those. So that's a pretty awesome result. Material weakness is kind of the most severe on the scale of internal control deficiencies. And anytime there's a material weakness, it could be when a person in accounting could do many different things at one time. So in theory, be able to do something like write themselves a check and then see it go through the bank, yet nobody else actually sees the check or the bank statement or does a reconciliation. So they could send wires to their friends or do whatever. So that's kind of the most severe end of it. And then significant deficiencies is more where you might not have another person in the review process that you should, but you couldn't pull off like a big fraud. So fortunately, you didn't have either of those. You have good controls in place. And that is all I have. I guess I'll open it up to any further questions at this time.
No questions from my finance committee folks. You're very thorough, Ben. Thank you.
Thank you. Okay, well, that's, I guess, all I have tonight. I appreciate your time. It's an honor working with you and the community association. We really value you and are always here for you. If you have questions or anything, and again, I encourage you to read through those financials because you'll probably learn something. So,
I learned a lot about the accounts and you know,
Yeah.
more detail about the accounts and what goes where. So it's very helpful recap. I think AJ had to step away, so I'm going to step in on his behalf and thank Ben. And then in the absence of any more questions, I'm going to give the floor to Joel for September financials. So a little bit more numbers and money. And then Joel, correct me if I'm wrong, but you said that the October financials will ready towards the end of this month. So that's why we're not covering those today. We're covering September. Is that correct?
Right, yeah, that's right. It's almost essentially like we're doing the last board meeting in November today, from my perspective.
Yeah.
The October statements will be done next week and posted on the website next week.
So if anybody wants to look at October financials, log into suddenvalley.com, right?
Well, thank you.
Okay,
Ben, for
Thank
the-
you,
Yeah.
Ben.
Thanks a lot, everyone. Have a good night.
Yeah, thanks.
Thank you.
Bye.
Goodbye.
And Joel, thank you too for all your work. I know what you did on that. We all know. So thank you so much for working with them so well.
Oh, thank you. Yeah. So I guess we'll cover September now. I'm just gonna pull up a couple files real quick. Everyone can see what's the balance sheet right now?
Yes.
Okay. Okay, so now we fast forward from December 31, 2020 to September 30, 2021. And so the good thing about this month in September, which is the big thing, is you recall this right here, this PPP loan liability amount from that you've seen ever since the May 2020 statements on. So in September this year, that's when we officially got our PPP loan forgiven by the Small Business Administration. So that's why it's obviously it's $357,700 at the end of December 31, 2020. Now it's at zero. And then, so basically, where did that liability go? There's, in terms of, might as well just go to the income statement. Now, here's where it went to. So it went to, here it shows up on the income statement as PPP loan forgiveness. It's debt extinguishment is what it is. But so I just called it PPP loan forgiveness / extinguishment. So that's where this whole $357,700, that's where it went to. So it showed up on the income statement in one shot in September, just a couple months ago, which, as you can see, will significantly reduce our operating income. So might as well just go right to the operating income. So as you can see here, operating income at the end of the September was close to $800,000 and obviously a big component of that was about, real close to $360,000, that PPP loan forgiveness, which is contributing to this number. So if I just gave you some comparables, so just keep in mind when I give you comparables, 360,000 of this September's operating income has been increased because of that PPP loan forgiveness revenue, or it's essentially a gain on debt extinguishment. So at the end of September 2020, we had about $260,000 in operating income at that point. Now we have $794,000 approximately. That obviously creates a better than budget of about $604,491. Last year we were better than budget at the end of September by about $80,366. Another important is that this collection rate right here. Okay, so the collection rate at the end of September, so keep in mind our budgeted collection rate is 95% for the year. So our collection rate at the end of September is already, it's at 95.6%. So we're already north now, which is good at that collection rate. We were last month too, but it's been getting stronger. So October's collection rate, I haven't yet calculated November, but October's collection rate caused it to go up to just a 1/10 of a point more as well. So now it's 95.7% year to date at the end of October. And this is the time of year where, even back into September or so, but this is the time of year where we make up ground collection rate wise. So we're doing well collection rate wise. Last year at this time, at the end of September 2020, we had year to date 94.5% collection. 2020 was a worse year, obviously, for us, for everyone with that pandemic. But at the end of December 2020, we still finish out the year at 95.5% collection, even though we were at 94.5% at the end of September 2020. So here we're 95.6% already at the end of September. So, we probably stand a good chance to get it up into the 96 or so range by the end of the year, which will be good. At the end of October 2020, it was still 94.5%. So we basically gained a whole percent between the end of October 2020 and the end of the year, December 2020. So, but if that repeated, then it could be 96.6% by the end of the year, possibly. There's no guarantees that'll happen, but we're going in the right direction for that. In terms of I do talk about the expense to revenue ratio, which is all that is expenses divided by revenues. Obviously, the smaller the number, the better in this case. And as you can imagine, since we have this nice, healthy operational income, it's going to be lower than obviously it was last month. So now it's 78.3%. Last month, it was 86.3%. September 2020, it was 90.6%. So we're clearly better off now than we were last year at this time, which is great. Now the next page, the capital reserve funds page. So the good thing about this page, because we talked about, or like Ben was talking about, that ASCII 606 and how that affects how, let me turn back to the income statement. So here we have the capital reserve, dues and assessments income capital reserve. So this number ignores that accounting rule change. We're just doing it month to month, how we did it before. Now, if I were to switch it back, this number would be less. And then that would start to make it confusing of how much money we're really taking in. So basically the way that we've been structuring this income statement over the year, how we're kind of recording bad debt and showing it on the income statement, is we're trying to kind of keep these dues numbers fairly kind of almost as close to cash as we can kind of keep them, in a sense, to give us a good accurate depiction of how much money we're actually taking in dues wise month to month throughout the year. And then the dues received obviously coming in here. This is cash coming in. So this is that's the good thing about that. So you're looking at, because this is the cash balance page. So this is all, everything you're seeing here is a cash effect coming in. So, this page is just a function of net available cash, there 1,688,052. I could go back to the balance sheet, and there it is right there, reserve cash. And then at the end of September, 2,414,138. Well, I should be able to see that, which I will, right here. And then obviously just big items in between: dues received, expenditures, which includes everything in the expenditures, capital, anything we put money out for, like capital expenditures, loan payments, all that stuff all gets swept up into this. Basically, that's, you can think about that cash that went out the door. And then down here is just a forecast. Basically, this is the big one, obligated expenses. This is just telling you as of now, that's everything that the board has approved as capital expenses for SURF. And that's everything that we still have budgeted to spend, that we're on the hook for because of those approvals. And then this number takes away the board recommended carryover balance. And then this is really what's telling you what we're projecting could be usable at the end of the year, 1.9 million that we could have to spend on things, to spend on capital improvements. And the same goes for each one of these columns. The big ones: SURF, roads, the mailbox, the things that you'll have real capital expenditures on. These are all up, as you can imagine, from last year. And capital reserve holding fund is this one right here, where that transfer fee, that 1/4 1% comes into, and emergency ops and UDR. And obviously UDR also, we have some approvals for like GM recruiting, tree removal, that sort of stuff. Once, now that we're into September, and actually probably since you've already gone through so many numbers, this page is the same as this page here, with the exception that this page is taking all those income statement. It's basically the income statement again, the operational side of it, but it's broken down by department. So that net operations, 390,744. Then I could go right up to the income statement, and there it is right here. But this is just showing you what department is responsible for what, over budget, under budget, whatever. And this is only for the month September, just for the month September. So we might as well at this point just go to the next page. You're seeing the exact same thing, but now it's year to date, all 9 months. So there's that 793,591 that I pointed out, the operational net income. When you get to the bottom of this is after UDR comes out of everything. But basically, this is breaking it down by department. Golf is obviously our biggest department in terms of revenue producing department. So in terms of, I'll just hit on the highlights of this, the golf. As you can see, actual golf revenue, now you can see it materializing in the financial statements. So there they are, kicking up over $1 million of revenue at the end of September. So they had basically 1 million, almost $41,000 of revenue. Last year, at this time, at the end of September 2020, they had, about $825,000 of revenue. So they have an increase of about real close to $217,000. Well, closer to $216,000 increase of revenue year over year at the end of September. The total expenses for golf, which is this is the payroll costs here, and then all other expenses here. So this number plus this number would give us the total expenses for golf. They had approximately $728,000 of expenses for the year. Last year, at the end of September 2020, they had about $627,000 of expenses. So their expenses are up by about $101,000. Of course, they were closed back last year during the pandemic, so we would also expect those expenses to be up, and including the revenue. But the revenue was really up nicely this year over last year. But their net income at the end of September, $313,248. Last year at the end of September, 2020 was about $198,000. So they have an increase of about $115,000 of net income at the end of September 21 versus September 2020. So, but I would say just kind of those would be the biggest highlights of the September financials. So obviously the biggest thing for this is where you're seeing the PPP loan forgiven. So now it's no longer a liability to us. It's in our income statement as a gain on debt extinguishment. And so that, I guess that would about do it for the September statements. If anyone had any questions for
So
these.
Joe, I did forward you a couple of questions that I think Linda Bradley emailed over. Did you get those? It was about.
Matter of fact, I've got those right here in front of me.
Okay, yeah, we can get those answered.
So Linda Bradley. Okay, so one thing, so Linda Bradley basically asked,
I think it was about the trees, the
Yeah.
emergency trees. and
one
some-
aspect of the question is she was saying that the on the HCC security page, it shows the 61,169. She just accidentally misread this number. It's actually 62,169. So so it's essentially, so basically, why is there a difference between this and she was saying, shouldn't it be around 62,177? Well, it is. She just accidentally misread this number as $1,000 less. And then another question was, basically the other part of her question was, hey, we have this variance right here of 22,862, meaning she's saying, hey, the budget says, and this is kind of a good question because this is a good thing to point out in terms of how this budget module works is, but if you look at this, so what I'm looking at right here is I'm actually looking at these statements that are online on the Finance Committee website. And the good thing about this is like 33 pages. So it starts out, at a very high level, balance sheet, income statement. You're looking at the whole association. Then you keep the cash statement. And then you get to these pages of which we talked about, which now you're starting to see it on a departmental level. You get to this page, now you're actually seeing it by category, administrative expense. And then when you get beyond this, then you get into the actual departments themselves, and you could actually look at an actual GL line item per department. So now we'll go right to the ACC security, what she was talking about. And so this says the actual expenses for the year is 62,169. The budgeted expenses, 39,308. So this is what this is saying is, hey, you're over budget at this point in the year that you should be by 22,861, because the annual budget is 60,000. So how it works in the budget module is, unless we kind of know for certain when these expenses are going to hit. Like, for example, Brian knows when major expenses happen, payroll and all that stuff. And he will tell me during budgeting, take my payroll and put it into these months, unless we know precisely when those expenses will hit. The software will take the 60,000 and then just divide it by 12 and increase it every single month and, and start adding it here. But that doesn't guarantee that. So basically 1/12 of the expenses will start to show up every single month and become cumulative, but that doesn't guarantee that at this point in the year, 9/12 of our expenses for trees actually would hit by that. That's just an estimate of what the budget is saying, the software. But we can't control when those trees will, 1/12 of all the trees will fall in any given year, and then we'll send balls out or whoever to do some work on the trees. So this is a little more, this type of a line item can look a little more skewed in terms of how it is to budget from one month to the next. Now,
it'll balance out by year end then.
Yeah, when you look at it, once the year is done, then now that's a better way to kind of to see a line item like this. But from month to month, it can be skewed. So like, let's just say we didn't have any of these expenditures, like the worst months of the year happened by coincidence, October, November, December. You could see through September, we would be running way under budget, because it's still assigning a certain portion to it every month. Now, a second part of her question, which is a good question, she said, so basically she's asking about the SURF loan, and where she mentions, she sees where the interest expense is, but so the SURF loan payment is about 16,393 per month. Now there's an interest, whenever we make that means there's an interest component and a principal component. So we go to the interest expense right here. Okay, that's what she's talking about. She's talking about this 4,646 is literally kind of, it's under the capital reserve column. That's what you're looking at. That's the SURF loan interest expense portion of that monthly payment. And then what she's wondering is, where does the principal portion of that payment show up? Well, the principal portion of a loan payment will not show up on the income statement. It basically, it's just going to come, it's going to be paid out of SURF is where it's going to come from. It's actually, that other portion of it draws down the SURF cash as we make those payments. So the SURF cash goes down, and then likewise, the SURF loan liability goes down in return. So if now in this case, let's just say that we made one payment for $1 million and there's no interest component of it, just so it's easy to see, then SURF cash would then become 1,414,138. And then this SURF loan balance would then become 155,260. It would go down. So SURF cash will go down, SURF loan liability will go down. And by the way, the SURF cash will go down by the interest component of it as well, but you will see the interest expense part of it show up here on the income statement. Those were the two questions that she had.
Thank you, Joel. Anybody else have any finance questions from the committee? Or anyone else for that matter?
I have a question.
Sure, yeah.
This may be a very naive question, but Joel, if you would take a stab at it, I'd appreciate it. And that is, as we look at the overall structure of the budget for the association, we have activities like we have recreational activities where there's a fee, an additional fee to participate.
Yeah.
And so we show, for instance, I mean, I always look at golf. We show golf doing very, very well, drawing in, you know, producing more income than their operational expenses. But why? I mean, this is like almost philosophical, financial philosophical, but why are the capital expenses not considered part of the cost of that activity to the association? I know that they're broken out in terms of the statements. You have your capital expenses and the operational, but why in terms of the viability of an activity would one not also include or look at the capital expense?
Oh, well, I mean, like, ultimately, yes, you're right. You do look at it from a capital expense way. Of course, the way that we show it is on a fund balance type way, where we have this hard distinction between operations and capital, which we need to have. But in terms of like, just in terms of from a overarching operational standpoint, yes, you're right in terms of that when golf has, or the marina or whatever has capital expenditures, that the capital portion of it is considered as well from that standpoint. And then of course, you know, obviously the way that we do it, since we have that, or as any HOA is going to do it, since you have that real big wall between operations and capital, that's why you'll have like two separate budgets with two separate dues amounts coming in.
So you're saying, in other words, it would be the responsibility of the decision makers, the governors, whatever,
Yes.
to kind of join those numbers if they wish to understand the total profitability or viability of an activity.
Yeah. And then it, you know, it would come down to the overall, that's basically how the due setting process gets, that's how it happens. Like when we do the budget, you know, you'll see the big meat of the presentation is the operational part. But then when you get down to those spreadsheets, the capital reporting spreadsheets, then that is where we're budgeting for the capital side of things. So that's where we're looking at how much will we have left over from year to year, according to the reserve study says we should do this or that, or what needs to be put ahead or pushed out, or and then it all starts to kind of structure how much we'll have for residual balance for like the different funds, surf and roads, and obviously mailboxes doesn't really have any expenditures going on right now, but yes, so meaning like that's how like the capital dues portion of it gets established, and then the operating portion of the dues gets established, you know, the same way, but with the exception of just it's only focused on operations.
Okay, well, I appreciate the overview. Thank you.
Yeah.
Any other questions? All right, hearing none. Thank you, Joel. And thank you for everything set up with the auditor as well.
Yeah.
So at this point, that's the end of the financial stuff. The finance committee is welcome to enjoy the rest of their evening if they would like. You're obviously more than welcome to stick around too if you want. We just got a couple quick agenda items left here for the board to take care of. But
Thank you. Signing off. Thank you.
Thank you.
Bye-bye.
Thanks, Callie.
So the next agenda item is the GM update. The The board has completed 3 interviews of GM candidates, and the management team is still has 1 candidate left to interview. And we'll be having a meeting next week as a board to have a closed session to discuss all the candidates and make a decision on the path forward. That's about it for that at the moment, unless anyone thinks I'm missing anything.
And that we hope to have someone starting next month. We hope to have once we make our decision, we hope to have a new GM next month.
Good point. But that's pretty much where we're at with that. And then the last topic is filling the board vacancy left by Steffi's resignation. So I was looking at the calendar. Nancy, what day did you say you had closed was it the 11th?
January 11th.
So if we posted the opening tomorrow on the website, we could have it open for 30 days and then fill both vacancies at the same time.
It looks like it. I'm not sure how that 30 days is counted. Is it actual calendar days or? guess
I
it is.
believe so. I don't think it specifies business days.
I think we did this before, we had this before where we extended it so that, so we could end them all on that. We started the 30-day clock from now and just did the vote on both of them at the same time. We did that, whatever it was, a few months ago. So we just start that clock and it basically says we'll endeavor. But that's what we did before.
Yeah, I think my thoughts were, we have to advertise for 30 days, and then we're supposed to endeavor to fill within 60. The current vacancy that was open after the AGM is, we can't push the date Nancy's having that closed for us earlier. So that's the 11th, and we can still meet our 30 days notice if we get something on the website tomorrow. We can continue to use the same form then because it's got the appropriate date for closing. We can just use that same closing date of the 11th. And then I believe we were planning on interviewing candidates for the board at that first January meeting.
Is the first January meeting, isn't that
The 13th, I think.
Oh, is it? Okay. And then
let me double check, make sure I didn't.
Also, would we have to include holidays as part of that time? Would holidays be not counted?
That's what I don't know.
I don't know.
No, holidays, it's just like an actual.
It's just 30 days.
Yes,
Calendar days, I think. It's not like working days or business days or anything like that.
That's what I was thinking, more business days.
Do you really want to do both of them at once, though?
I mean, it'd be nice to get it taken care of, but
What are the drawbacks of doing them at the same time? We're interviewing GM candidates all of the week. It's just it's all the same to me.
The only other option I see really is to advertise for 30 days, but then interview this person at this new vacancy at the second January meeting. But that, to me, it's like, if we have the ability to combine them and we can still meet our thresholds, it seems easiest to do that.
The only thing that bothers me is the attorney interpretation that you need, if you only get 2 candidates, there's nothing to do, nothing to interview for. They're both on.
That's the way it's gonna be anyway, even if we do it with one. Like if we do them one at a time, if we only have one person.
No, Nancy?
No, because you've got to have 2.
No,
If you only have 1 person, you open it up again until you get 2 or more.
that's not, is
I
that the
don't
way
think
you
so,
understood
Nancy.
that? No, the attorney is not saying that.
Yeah, he is, if you read it, if you look at it. Our bylaws are real specific.
Hmm. So Nancy, are you suggesting that we do one at a time? So that
Well,
we have a
I think
choice?
it might be something you'd want to think about.
Hmm.
But by what you're saying though, Nancy, it goes back to that's where he corrected us, is that's the way it's been done all this time. Is that if we had one opening, we had to have 2 applicants, and he said, that's not true. What it says is that we need to endeavor to have 2. If we only have 1, then we need to appoint that 1. That's what he told us.
Yeah, that was my understanding as well.
Okay. Well, I wasn't on the
It's
board
been
at
it's
the
been a hot
time.
minute since I read that letter, but I
What
don't
are
know.
your choices if you only have one candidate? You can't just keep waiting and hoping that somebody else will come along.
We did that last summer. But if the new thing, if the lawyer's opinion is that specific, well, remember, I was not on the board. I did not see the opinion. I got kind of a secondhand discussion. So if you're saying one candidate applies and that's it.
Yeah, he basically said that, it's like the language is that it's not a shall statement that we shall have 1 person more than the number of vacancies. It was like the board is requesting that, but it's not a hard and fast mandate. It allows some flexibility for this instance, and he was saying if you have the opening and you have someone willing to serve, are you really gonna say no to that person just to get 2 people? And we could do something, if it comes to it and there's only the same number of people as vacancies, we can do something similar to what we did with Sam when he came on, and that was like, we just had them do a brief introduction of themselves and like the vision of what they see for the valley, so that there was so it wasn't just like nothing, like the community still gets to hear from these people before they're officially put on the board.
Can I just make a suggestion so that everybody will feel comfortable with this? Because Nancy has a different interpretation. I think maybe and she's chair. No. Well, here, let me just finish this.
I don't have any interpretation.
Well, that's my point. I guess
I have not read the letter.
That was actually my point. I was getting to is that I was going to suggest since we're going to have a meeting on Tuesday, why don't we table this? And then that will
can't meet 30 days.
Nope.
Dang it.
Well, why don't
you can put it up there. If you decide to withdraw it. Nothing says you can't withdraw it. You just have to endeavor to do it within 60 days.
Okay, I was just going to try to give you time to be able to review whatever needed to be reviewed. That's all. And the new board members.
Timing.
And at least if you put it in tomorrow and we're in that 30 days, then even if we discuss it Tuesday, we can decide how we want to do it, but at least get it in so you can have it in the 30 days So we still can have them both close on the 11th.
Yeah, I mean, my preference would be to just do it all in one evening,
Okay.
you know, instead of trying to, take up 2 board meetings doing it, since we have the time frame to be able to do it. Because yeah, with the last one, we pushed it out to January, so that we could, because I don't think we were going to be able to really meet our 30 days for this meeting or something like that, but I can't remember exactly at the moment, but
Sam's hands up.
go ahead, Sam.
What would the term of service be for those 2 positions? So we can get that out on this recording.
These are all one year. They would just fill the vacancy till the AGM.
Mhm.
You have to be elected to get a 3-year term, unless there's more than 3 people elected. Then only the top 3 get 3-year terms, and the bottom, however many, get 1. So is everyone in agreement of just advertising tomorrow and planning to try to fill both vacancies in January at the first meeting?
Yes.
Yes.
So who is going to write the announcement?
That's you,
The
Nancy.
chair of the
I was
NNE.
afraid of that.
Look at past ones and change the dates.
Yeah,
I
we
bet-
should be able
yeah.
to recycle the last one that you used and just update it.
That's all you
I'm
need.
I'm a firm believer in copy paste and then update.
Not
Okay.
reinventing the wheel.
But yeah, let us know if you need any help with that, Nancy, and then we can get it. We can work with John or Deb or Jessica to get it posted tomorrow.
Yeah, because it does have to go up tomorrow.
Yeah.
Okay.
Okay, well, it sounds like we have a plan on that then. So that is everything for the meeting tonight. We'll move into our last round of
Did we vote on that?
I just consensus. It's a
Okay.
pretty trivial thing.
I voted against.
I've never actually voted on any of those ever in all. Normally we do it during announcements. We have this discussion. Because
You can
that's
vote against it. Now stop it.
Oh no, I'm sorry. I was just joking. I shouldn't have even said it. I was just kidding. No, I'm fine with it. I do want to find the information because I don't remember it totally either, and I want to make sure that Nancy has it. It always bothers me when somebody's, like everybody's on the same playing field and everything on when we're talking about these types of decisions. I want to make sure that we're in agreement on what the bylaws say and what the attorney's saying. So we can always change it, just like Tammy said, if we need to. So that's something we can do internally. So I'm sorry, I shouldn't have been silly and made a joke. I'm all for it.
okay. All right. Well, we'll move into property owner comments.
Yeah, 4 people still with us, and I've got a hand raised from Linda. I'll go ahead and bring her on over. Linda, I brought you into the meeting. You can go ahead and unmute.
Hello, I'm here.
Hello, Linda.
We
can
hear
me.
you.
Linda Bradley, 2782. I promised I would ask, and I've been looking every day. There's been some discussions online, and so I'm going to ask of the board. You guys have approved a ton of meeting minutes for 2021, and none of them are posted unless they got done today. I was busy here at home. So if they haven't been, who's in charge of posting all of the minutes to the website?
John.
I have to sign them still, Linda. I've been working a bunch of overtime at work with all the flooding stuff and emergency projects and stuff, so I haven't had a chance to get in and sign them.
It's just we're really outside the window of having, especially if you haven't signed them, because then there's not even the paper copy that a member can request. And I just, it's something that I really would like to see it taken care of. I think AJ, you even brought up that some of those minutes, because you didn't have anybody on staff, you ended up doing.
Yeah, I
So,
wrote some of them, but yeah, basically I got sick for like a week and a half after the AGM, and then the flooding happened and work got crazy. And
can we please,
I haven't been in, I actually just went into the office for the first time for one of the GM interviews in like 3 weeks. It's been that long.
the other thing I wanted to ask about, and then I'll be done here, is normally before a new general manager is selected by the board, there's a time where the membership gets to meet or at least be introduced to these people. Are you waiving that this year?
Before they're chosen?
Yeah, a
Yeah,
lot of times
well,
there's been this.
AJ explained that, basically, we've been asked by the search firm not to do that because these candidates have other jobs. And so until we actually announce and make a determination, because, it's basically confidential. Otherwise, they risk their current jobs.
Oh, I understand, but I'm saying, the last time that we had candidates for the position of general manager, they came and were interviewed. I believe all three.
Well, that's exactly what happened. It's just that we're not going to introduce potential GMs to the community.
So you're basically going to interview your last candidate, and then when you vote at your next meeting, you're going to determine who that is, and then the community is going to get to meet him, or how's that going to work?
Yeah, we also are getting the input of staff. And then once they're selected, yeah, we'll have an opportunity for you to meet the next GM. But unfortunately, it sounds like we aren't able to do it like you did last time because of the request of our search.
I'm just saying that's the way we've traditionally, it isn't
right, but
it's been before and before.
But this is a contract with a different company, and this was the agreement with this company.
Oh, all right. I didn't see that in there. I'll have to go back and take a look at
It's an agreement when they produced the final candidates that they made that request.
Oh, all right. I didn't know. If it was in the contract, I can take a look because I believe that was published when I was still on the board, that I was able to see it.
I didn't say it was in the contract. So it was when they presented the final candidates, it was a request that they made.
Oh, so this has only been a request from the search firm.
Exactly. It's an agreement with the search firm to bring these candidates in. It's very unusual to, when these things aren't normally public at this high of a level, to put names out of potential candidates. These people normally have existing jobs, and so they don't necessarily want their current employer to know that they're applying for another position.
I'm just saying that you can go back and look years back when we've hired people, and there's always, that's all I'm saying. So I've asked my question and you've answered it.
Thank you, Linda.
Okay, I'm all done.
Thanks, Linda. I'll go ahead and move you back to our attendees. All right, anybody else for property owners' comments?
I have a comment. If Josh was here, he would probably do this, but there's breakfast with Santa coming up. So I don't know any more details. But I know that Joshua and the staff that are working on that would love for everybody to come out, and it's going to be at the firehouse. And John, maybe you have more information. information, but I feel like Josh will be disappointed if we don't let everybody know. Breakfast is with Santa is happening this weekend.
Where's that going to be and what time? Do you know?
Not right offhand, but pulling up suddenvalley.com.
It's on there.
If I go to the recreation page, I think they may have something there.
Okay.
Yep, right on the recreation page, 2021 Breakfast with Santa. So there's a little more information if anybody's interested. You can just go to www.suddenvalley.com/recreation, or if you're on the home page, just pick the recreation button on the left-hand side, or there's a link in the mobile version.
So apparently we're being told in chat that it is limited and people need to sign up. So if you want to go and see Santa, you'll need to go onto that site and book a time to make sure that you receive a continental breakfast and get to have time with Santa.
Is Santa going to wear a mask? That's what I want to know. We have a COVID compliant Santa.
Yeah, that's why they're doing the sign-ups. Yes, to make sure that they're compliant.
COVID compliant Santa.
Thank you, John, for looking that up.
Oh, sure thing.
All
All right.
right.
Yep. Go ahead, AJ.
No, I was just gonna say any other property owner comments, otherwise we'll call it a night.
Kind of early.
Damn, be quiet. Will somebody bring something else up? Be quiet.
Sam came in at those long, up to almost midnight meetings. He thought that was normal. No.
I'll be happy. I'll take my NyQuil and go to bed.
Yeah, Sam was not saying it was early last night. He was like, somebody said it's late.
Well, good job, everybody. And
Move to adjourn.
Second.